What if I told you that one of Wall Street's most legendary investors, the man who predicted the 2008 housing collapse and made hundreds of millions, just cleared out his entire portfolio? That's right. Michael Burry, the contrarian genius behind Scion Asset Management, sold every single stock, except for one. No tech giants, no dividend kings, just a lone cosmetics company, Estée Lauder. What's going on here? Is this a bet on beauty, or a warning about something far uglier on the horizon? Today we're breaking down Burry's latest portfolio, stock by stock, to uncover what these trades reveal about his market outlook. Let's begin. First on the list, and the only stock Burry is holding, is Estée Lauder Companies Inc., ticker symbol EL. As of Q1 2025, this cosmetics giant makes up 100% of his portfolio, with 200,000 shares valued at $13.2 million. That's double his previous stake, and a bold signal. His average buy price was $78.92, and the stock has already gained 12.2%. But Estée Lauder has had a rough ride. It's down over 80% from its 2021 peak. Sales are shrinking, margins are thinning, and Asia, which drives 31% of its revenue, is still reeling from China's economic struggles. So why is Burry buying? Because beneath the surface, this company still has elite fundamentals, a 75% gross margin, a price-to-sales ratio of just 2.16. Well below competitors, and a new CEO with a turnaround strategy in place. Plus, the lipstick effect suggests that even in recessions, consumers still buy small luxuries like cosmetics. In 2008, while GDP shrank 2.8%, Estée Lauder's revenues grew 7.7%. This isn't just a stock, it's a recession hedge. Next up, let's talk about what Burry sold, starting with VF Corporation, ticker symbol VFC. Known for brands like Vans and The North Face, this was a bet on retail apparel, but Burry dumped all 200,000 shares, even after a nearly 40% decline from his average entry of $20.71. The message? He's steering clear of U.S. discretionary consumer spending. If a recession hits, fashion and footwear are often the first things cut from the budget. Second on the liquidation list, American Coastal Insurance Corporation, ticker symbol ACIC. Burry exited all 146,100 shares, despite the stock being up 10.4%. That's a strategic retreat. The insurance sector faces volatility from natural disasters and payout risks, especially in the Florida market where ACIC operates. This wasn't about taking profits, it was about reducing macro sensitivity. Next up, PDD Holdings Inc., ticker symbol PDD. Burry completely sold his 75,000 shares here, exiting at a 10.3% loss. PDD was once one of his biggest bets in Chinese e-commerce, but now it's part of a broader de-risking move away from China, and PDD wasn't spared. Fourth on the list is Oscar Health Inc., ticker symbol OSCR. A digital health insurance play, Burry held 200,000 shares and exited them all at a slight 4.1% loss. Oscar's been a speculative stock since its IPO. Burry's exit shows he's pulling out of high-burn, high-risk tech, especially in healthcare. Next up, a surprising exit, Molina Healthcare Inc., ticker symbol MOH. This Medicaid-focused provider is traditionally seen as recession-proof, but Burry sold all 25,000 shares at a steep 31.3% loss. Why? Possibly concern over government healthcare budgets or policy shifts. When even your defensive stocks are sold, that says a lot about your macro outlook. Let's move to Magnera Corporation, ticker symbol MAGN. Burry sold 200,000 shares at a 37.1% loss. This was a small-cap biotech stock, high risk, low liquidity. In a risk-off environment, these are the first to go. It's another clear signal that he's moving away from speculative bets. Next on the list is JD.com Inc., ticker symbol JD, another Chinese e-commerce name. Burry sold 300,000 shares at a modest 4% gain. JD.com was a cornerstone of his previous China thesis. His exit here is not about profit-taking, it's a macro shift. He's cutting exposure to China, plain and simple. Moving on to Baidu Inc., ticker symbol BIDU. Burry sold 125,000 shares at a 14.5% loss. Baidu is a leader in AI and search in China, but with rising geopolitical risk and tightening US-China tech restrictions, it looks like Burry doesn't want to be caught in the crossfire. Next up, the biggest name on the China list, Alibaba Group Holding Limited, ticker symbol BABA. Burry owned 150,000 shares at an average price of $81.13 and exited at a gain of 36.5%. Despite this solid return, he still dumped the entire position. That tells us everything. He doesn't trust the recent rally, and he's worried about tariffs, capital controls, or worse, Now to HCA Healthcare Inc., ticker symbol HCA. Burry exited 15,000 shares at a 7% gain. HCA is a massive hospital network and typically a stable bet, but Burry's sale suggests he sees regulatory risk or margin pressure on the horizon. Even healthcare isn't safe in this cycle. Let's look at Canada Goose Holdings Inc., ticker symbol GOOS. Burry sold all 24,840 shares after a modest 5.3% gain. This luxury outerwear brand might be strong in branding, but it's vulnerable if high-income consumers start pulling back on spending. Burry doesn't want to find out the hard way. Last on the list is Bruker Corporation, ticker symbol BRKR. Burry sold 75,000 shares at a sharp 33.5% loss. Bruker is a scientific instruments manufacturer, a niche industrial. But in a rising rate, low-growth environment, even reliable B2B names can face margin pressure. Another calculated cut. So what does this dramatic reshuffle mean? Michael Burry isn't just adjusting positions, he's making a statement. And if you read between the lines, it's clear. The doctor who diagnosed the last financial crisis sees new symptoms emerging in today's markets. First, he expects economic contraction. His all-in bet on Estée Lauder isn't random, it's strategic. The lipstick effect suggests that when recessions hit, consumers don't stop spending, they just trade down to affordable luxuries. That's where Estée Lauder shines. It's not about glamour, it's about survival. Second, Burry is pulling away from China, hard. JD.com, Alibaba, PDD, Baidu, gone. This isn't tactical trimming, it's a total retreat. Whether it's rising geopolitical tensions, fears of tariffs, or lack of confidence in China's economic data, Burry doesn't want exposure to that storm anymore. Third, he's retreating from risk across the board. Small-cap biotech, speculative tech, consumer discretionary, all cut. Even healthcare names, often considered defensive, were wiped out. This isn't hedging. This is full consolidation into a single, undervalued, high-margin name with recession-proof potential. This is not diversification, this is conviction. And when Michael Burry goes all in on one stock, history suggests you'd be wise to ask why. 12 stocks sold, 1 remains. And it's not a flashy AI name like Nvidia or a trillion-dollar tech titan like Apple. It's Estée Lauder, a battered beauty brand that most of Wall Street has written off. Maybe Burry sees a turnaround story, or maybe he sees the rest of the market headed into something far more painful. Either way, he's already made his move. The question is, what will you do? Thanks for watching. If you found this breakdown valuable, give it a thumbs up, subscribe for more deep dive investment content, and let us know in the comments, is Burry crazy, or is he once again way ahead of the curve? Stay sharp, stay skeptical, and always follow the money.